Hello and welcome to Welcome Home Radio. The waters in the mortgage industry can be pretty muddy, whether it's investing, leasing, renting, home insurance, or myths and misconceptions. Welcome Home Radio has the answers for you, the consumer. And now, to help you make the right home buying decision for you and your family, here are your hosts.
And welcome to Welcome Home Radio, where real estate lending and learning come together. This is your mortgage market update for August 18th. Rents are still on the rise. We are close to a 10% year-over-year increase for rentals. This is really driving a lot of people to looking at mortgages, buying their first home, or at least leasing. MBA released and reported purchased applications fell again this last week. Purchase applications are down 19% year over year, and refis also fell 5% and are down 8% year over year. There are still 3.5 million people that would benefit from a rate or term refi with rates at historical lows. While builders are still dealing with bottlenecks in production as well as materials, we only see builder confidence down 5 points. With rates staying strong, we see a very strong fall for home builders in the very near future. As we speak on still good for refi, strong new home builds, there are key items that everyone should be aware of and concerned with. This can impact not only your ability to refi or buy a home, but also allow you certain jobs, maybe promotions at work. Of course, I'm speaking about credit scores. And joining Alan and I today is Nathan Biller with White Jacobs and Associates to help us understand what are credit scores, what can we do about them, how can we best handle it. So Nathan, welcome. Thank you so much for your time.
Thank you, Blair. I'm really happy to be here again.
We're appreciated to having you. Hey, Alan, how about them Rangers?
Well, what's the next subject?
Hey, I got to go to a game Sunday and got to enjoy. My goodness, they bombarded the Athletics that day. It was a great game. Enjoyed it thoroughly and got to see the new stadium. You go there, rain or shine. It was 72 degrees. Nathan, it was awesome.
Yeah, I went there for a Diamondbacks game about a month ago, and they actually won that one too. So maybe we're just the good luck charms. We should go more often.
There you go. Maybe they should pay us to come, right?
No.
Hey, I really love this subject because I think so many people ignore it and do not understand how it impacts their lives. And it's easily able to be manageable if they're aware of what's happening. Would you agree with that overall? Because it does impact not only ability to buy cars, homes, but it also impacts job employment, promotions, that sort of thing. Would you agree?
Yeah, the importance of credit scores and how those are used on a daily basis in this country is higher than it's ever been. You know, the more information people are able to access, the more they're going to use that for decision-making purposes. And so credit is as important or more important than it's ever been in 2021. So it's certainly something that people have to at least understand and take a look at what they can do to improve.
Let's talk about the unforeseen or the unknown ways credit is used in the industry, i.e., I want to specifically talk about jobs and job promotions. So first off, jobs. We have in excess of 10 million job openings right now with 12 million people unemployed. Yet employers are interviewing and they're just saying people are not qualified. Now, there may be a skill qualification, but also they look at credit when they look at a job app. Is that correct?
Yes, it is common these days, especially for larger companies, for credit to be included as part of an application and to be a reason for them to approve or deny someone for a position.
What jobs are focused on this one key thing? I know my job is focused. You cannot be a loan officer without at least a 720 score or better. But what other jobs would the public not be aware of that really depend on that credit score?
Yeah, to my knowledge, anything having to do with the finance sector or industry, including accountants, including marketing positions, business positions, all of those companies hiring anyone to handle anything financially tend to pull a credit report or request to pull a credit report as part of the interview and application process. Same thing for most government jobs. Same thing for a lot of private sector jobs that have to do with banking. There's a number of industries now, more than there were previously, where credit reports are part of the application process.
And so also, I mean, is it a surprise that even cashier positions at retail stores, grocery stores, are dependent upon that credit score? Because really, handling money of any sorts at any level, they want to know if you might have sticky fingers, or if you can't handle the credit at home, handle the payments, handle the money, they don't want you handling their money. Is that correct?
Yeah, it's increasingly so over the last year, with a lot of changes in hiring practices where they're being more selective in a lot of industries in places where you might never expect to have credit be a factor. Like you mentioned, going to work at a Kroger or a CVS as a cashier, their credit pull might be part of that interview process. So it's hard to say how it's going to change over the next year, but you can only imagine it's going to be more and more a part of what people use when they're deciding who to hire.
And now let's take it a step further. I think there's a lot of people that don't understand this at all. You're hired, you're working as a stock boy, or you're working in the back warehouse, but you want to look for that promotion. You want to look at moving up in the group and in the organization. When you signed your employment, you gave the authority in the white little lines, boxes, the authority for them to pull credit when they're looking at you. And that job promotions are held up specifically for reasons. Hey, if you can't handle your money at home in a way that's professional, in the way that is good, how can I trust you to handle my business? And therefore, a lot of promotions within a career may stop, or you hit a ceiling. It's due to the point of credit. Is that not true in the industry?
Yeah, these are typically situations where it's a pass-fail. So it's not like they're going to approve some people based on a certain score, but not others. Typically, if you have below a certain score, that alone could disqualify you from the application process. So, how fair that is another question, or how relevant it should be to what kind of employee you will be, is something we could talk about. But ultimately, if you have bad credit, there's a lot of jobs that you're just not going to be considered for.
Well, and a lot of times they don't even tell you. If you're already a part of the organization, but you're looking at that next level promotion, they don't tell you that they're looking at that. They don't tell you that they have pulled that, or it's just you're not considered promotable.
Right. When you're filling out the applications, or when you're filling out the new hire paperwork, you're giving them all your personal information. All there has to be is a small section that may or may not include a checkbox that says you authorize us to pull your credit at any time for employment purposes. You might not have any idea that how often or when they're actually doing that.
I mean,
I have a quick question.
Yeah.
So let's say you do, and I know that credit checks have been on applications for a long time, and most people do not know. I mean, I never knew once. So is there any law that says an employer has to tell a potential employee, either a new employee or one that's going to get raised up in the ranks, that the reason they didn't get the promotion or the job is because of their credit.
By law that I understand, they do not have to tell you.
Especially in Texas. There may be state laws that slightly vary, but in Texas, they don't have to give you any disclosure as to why you were chosen as a position or not for a certain application.
Okay.
A worked out right for hire state, right to work state, they do not have to. I mean, again, somebody can wake up one morning and say, okay, I'm done. I'm getting rid of my business, or I'm getting rid of this division, and they don't have to give reasons. But that is so important that you understand. And how many times, I mean, I pull in credit anywhere from 5 to 15 times a week, and I'm seeing credit reports. And Nathan, you deal with it every day because you're working with people that want to get better credit, but you're seeing things on there that is just really lifestyle issues and those things that they can really impact. There's some things that we can't, like my history, my bankruptcy way back, it had to wait for 10 years to fall off. And so in 2015, my scores jumped hugely because my bankruptcy fell off. It was completed in 2005. Again, that's part of my life. That helped me grow from that. But once that fell off, all of a sudden my scores were well over 800. And there's some things on there that you can do something about, i.e., I want to bring up credit cards. I really want to make sure people understand this because there's two types of trade lines on a credit report. One, there's basically, did you pay it on time or did you not? It doesn't matter whether it's $1 or it could be $5,000 owed. All it looks at is, did you pay it on time? Correct?
Yes, that's the most important part is your payment history.
Is your payment history. But the next is a revolving credit, a revolving debt. And that trade line is slightly different because it turns everything into a ratio. And then it looks at that ratio. And what it takes is the high credit limit. It takes the amount owed, turns it into a ratio, i.e., 1,000 high credit limit, 750 owed, basically 75% ratio. Simple math. But here's where it looks at. This is a computer algorithm. 0 to 30%, that's good use. 30 to 50 is neutral. It's not good, it's not bad. But anything over 50.01% is considered maxed out. And even though you pay that on time, that minimum, and you've never been late on that revolving credit card, that maxed out card is impacting your credit negatively, correct?
Yes, you are being impacted severely by having a ratio that high, even if your payment history has been perfect, even if you have, 45% left to spend on that card to max it out, it's still looked at as a derogatory impact on your credit scores.
And how many points can just one of those trade lines like that impact you?
It depends on the other things on your report, but it could be up to 100 points that could impact you.
Exactly. 120 points for that first one. Then if you have a second card that's maxed out, it's an additional 50 to 60 points. A third one's another 30 to 50 points. I mean, all of a sudden now we know why people's credits are low, even though they paid on time, but because they have maxed out credit cards in the eyes of the evaluator, which is the algorithms, and that's TransUnion, Equifax, and Experian. Look at that, and immediately, even though you paid on time, you don't understand why, it's because of those cards are impacting you and bring you down, that you will not be given consideration or for a job or for a promotion. And these are things that you thought, my goodness, I'm paying on time. That's why credit card companies say, hey, pay this minimum. We're good to go. But they still don't understand that is negatively impacting them.
That isn't why credit card companies say pay the minimum.
I know that's not why, but they say, even though they say it's good, you're okay. If you pay me the minimum, we're going to report you as good. It's not in favor of you due to not only the interest that is owed, but also due to the fact that ratio is so high, it negatively impacts you again and again. And by the way, revolving debt stays on for 2 months length time. I just don't understand all of that. Why? But the bottom line, this can negatively keep you lower in scores that I mean, 100 points, my goodness, that's the difference between a 640 and a 740.
Mhm.
And to us, that's 3 levels of interest rates evaluations in a mortgage. So big impact.
Yeah, and I would say most people are not aware. You're probably not going to be taught that. It's not something that's going to come up with your bank, certainly, or your credit card company until you're actually trying to get a pre-approval on a mortgage loan or some kind of financing. You probably are not aware that what you've been doing is not ideal for your credit scores.
And then that is something that they can control. That is something, and there's 2 things we can do about that. Alan, we're gonna give you a test here. You got this credit card. There's 2 ways to impact that credit impact. Of course, one of them is what? What would be that way to impact that ratio?
Well, pay off your debt.
Pay off the debt. That's a very simple one. But there is another way to impact that ratio without using any money. What is that other way?
Without using money?
Without using money.
I would say don't use the card.
No, there is a simple way. Ring-a-ding-ding, pick up the phone and say, may I have an increase in limit? It doesn't cost any money. It doesn't cost you anything. The worst thing they can do is say no. But if we can get an increase in that 1,000, let's say there's $1,000 limit on this one card, $750 owed, and I get an additional $1,000 limit put on that. That ratio now changed below 50%. And now it impacts your score in a positive way. It took away that negative impact, didn't quite get it to a positive, but at least it's neutral.
I would put it in layman's terms. I think, we talk ratios and all that stuff, but, you got to look at, you need something you don't have from somebody that has it. And you're always judged. Okay. You're a bad risk. You need to look at it that way. And if you're maxing out your credit cards, you're telling the whole world you're dangerous with money. So why would anybody want to lend to you? It's common sense. It goes back to probably something your grandma and grandpa said to you, or mom and dad, or somebody in your, household that has credit. But you have to look at it more of, the credit cards are still giving me credit. I can still go shopping and buy my stuff and charge it. Why can't I get a home loan? Well, because you have to look at the big picture. You're dangerous. People don't want to lend money to dangerous people that aren't responsible with money. And it's that simple. And you can look at ratios and algorithms and all that stuff, and that does get you the answer if you ever do get to a lender or a credit attorney or a realtor. But in the meantime, if you're listening to the message, that's how you have to see yourself going forward is, be less dangerous. Don't buy everything you can buy just because you buy it. Also, just because you can buy it with a credit card. The other thing is, even though Blair is correct, and I've heard it said on this show before about increasing your limit, well, guess what? That's dangerous too, because once your limit's increased, you're probably going to spend more because you got a history of doing that. So you got to be careful with that too, and you get buried even more. So I think we need some common sense involved with all this conversation, and we need to just tell people to be less dangerous with their money. If you really want a house, then you really got to talk to somebody like Blair or Nathan or me and discuss it seriously, and then we can move on. But in the meantime, be less dangerous.
Yep, that's a good way to put it. We're trying to help people understand how they can impact their scores. Nathan, we talked about revolving debt, which is one of the key things that people don't understand, and that impacts scores, like you said, dramatically. But what are those other things that you see people doing, because you deal with it every day, that they get caught up in or something gets happening? One of the areas I'd like you to approach is medical debt and the collections that come along, because you go and have a procedure done, you look at all the costs, you try to be prepared for what is insurance going to cover, but there always seems to be that second or that third little bill that comes trickling in, you knew nothing about, the insurance doesn't pay it, and then it goes to collections and you never knew anything about it. Help us understand those things that we don't see or don't understand as well, what we could be doing or checking on.
Yeah, I mean, you could be the most responsible person in the world with the best insurance in the world, and if you go to the hospital, there's about 6 different parties there that are trying to bill you for different things. The room, there's any procedure, there's any doctor that comes in, there's any medical prescriptions, there's an ambulance possibly, there's a lot of things that come in, and if one of those is not covered by insurance. You might not even be aware because maybe they sent a bill to a wrong address or failed to send it in a time frame where you received it. And next thing you know, you've got a medical collection that you're not really sure what it's from. So it's very common for people I talk to, whether they have very good credit or very bad credit, to have some kind of medical debt on their credit report that they oftentimes were not aware was on there, because it can take some time from the original date of visit or date of original procedure to when you actually see something on your credit report, because they've got to then sell it to a collection company before it's going to show anything on your report. So everybody should often check their credit report or have someone check it for them so that they're aware of anything like that that may have shown up that they had no knowledge of.
And I have another question for you, Nathan. If let's say, you have a Discover card and every month you get your bill, you'll get some kind of a thing on there. So your credit score is this or that. Are those reliable, or is that all just average mucky muck?
There's a number of different types of scores. So when you see those, make sure you know what kind of score they're giving you. They're either giving you usually a FICO score or a Vantage score. Those are the two most common. The Vantage score is a type of scoring model that is oftentimes given out and very rarely used in finance decisions. So when somebody's pulling your scores, they're typically going to pull a specific FICO score. Now, Discover may be even giving you a FICO score, but that's a general FICO score. It's not a specific FICO score. So if you go to apply for a mortgage, that score could be 100 plus points off, even though we're talking about two FICO scores based on the same information. So it's fine as a guideline to use any of those things. But if you want to actually know where your scores are, there are resources or individuals that can pull that information and give you the full range of scores depending on what you're trying to get approved for and what type of scoring model we're looking at.
Now, how many models are there, Nathan, that the scoring models?
Well, there's at least 13 FICO scores, and that's times 3 because there's 3 bureaus, and they typically are slightly different, and that's going to change day to day. So every single day, you're going to have at least 36 scores just in a FICO model, much less if we're talking about Vantage or Plus or the other scoring models. So it can get very confusing, and that's why it's good to speak with somebody that can help interpret what you're looking at. If you're looking at Discover and it tells you your score is 750, that's a good judge of a general range of where your scores might be. But there's a lot of times where the different scoring models have vastly different scores, as well as the bureaus show vastly different scores based on different information.
Can you help our listeners understand why are the 3 scores different? In fact, let's say, for an example, you've got 2 of the scores are sitting at 680, 685, but then you've got one at 500 or 599 or 600. Why do you see a dramatic, or how can we see a dramatic difference in that off of the same, since the algorithm's the same for across?
Right.
What is the difference that makes that impact happen?
Yeah, it's the same algorithm, but the information on those reports is going to be slightly different. It could be something that is derogatory as a collection or late payment on one bureau that was not reported to the other bureaus for whatever reason. Sometimes collection companies or original creditors will not report to all 3 bureaus. They'll only report to 1 or 2. Could be a negative, could also be a positive. There are positive accounts in your past.
Okay, now why would they not report to all 3 bureaus?
It's goes to money, right? There is cost involved. The bureaus are not working as nonprofits. They are there as profit businesses. And so they require those that report to pay them to report. And so a collection company may want to list a negative debt on your report, but maybe they're cutting costs and they're only reporting to 1 or 2 bureaus.
I get asked this all the time, and I've given out answers over the years that I think are correct. But if somebody wants to know their credit score, and that thing about a hit, you always hear the hit. Oh boy, if you look, well, that goes back to what I was talking about earlier about, okay, if you're checking on your credit, you're getting more dangerous. You're going to spend money. So how does it work for the average person to understand the answer to this? If they want to find out what their credit really is, does it hurt their credit to check their credit with, say, a lender versus a online person or whatever? And B, if it does hurt, why and how much? And if not, then no, that's great.
Great question.
There's not a problem with going to a lender and having them pull your credit, because that's going to cause an inquiry. An inquiry is going to impact that bureau at most 2 points, at most. And for most people, that's not going to make much of a difference. Now, if you're really, concerned about your score going down by 1 or 2 points, there are consumer sites that I use to pull credit reports without there being a necessary inquiry. And if you pull your credit through, Experian, Equifax, or TransUnion, or other sites like Privacy Guard or Identity Guard, there's no inquiry involved because you are a consumer that's trying to access your information. You could also go to annualcreditreport.com and get all 3 bureau reports without there being any kind of inquiry.
I'm sorry, I have to ask a question. You
Yes.
just said going out to TransUnion, Equifax, so forth, but you're not going to get a score with a free credit report. You don't get a score. And what most of these people, and what I believe Alan was asking, they're looking for a score. And what they need to understand is a revolving credit card score, somebody looking for a revolving credit card or an auto loan, is different than a mortgage loan. So you talked about 13 different algorithms. You have to be able to put in and request, I'm looking for a FICO 2004, which is a mortgage, or I'm looking for a credit card. These sorts of things are different. And so help our audience understand those scoring differences or why, so that they're getting the right information. So often you get people, well, my scores are 670. And then when I pull it, it ends up being 620. They don't understand it's 50 points difference due to the algorithm and wherever they got that score from.
Yeah. For people that are trying to get approved for a mortgage loan, I typically will recommend they go to the mortgage lender and have them pull a report, because the downside of an inquiry is not worth fretting about when we want to get accurate information on where your mortgage scores are. There are other ways to do that, but they are typically more expensive to get access to that information. So if I send them to Blair and he pulls a report and he tells me their credit's terrible, that's okay. We know where we're starting from and we have accurate information. There are sites that I use where I can get all 3 bureaus and scores, and those are going to be relatively close to what you're going to see on a mortgage report. Maybe not exactly that, but those do not require an inquiry. So there's a lot of different ways to access good information, but there's also a lot of bad information out there. And so it's up to individuals to try to discern what is a good score compared to what I'm actually going to see when somebody pulls as a lender. And that's why I try to talk to those people based on their goals and needs. We determine where we need to view the scores, whether they need to go to a lender directly or whether I should pull up a credit report online through one of these third-party sites.
And when for any realtors that are out there, and hello, David, thanks for joining the show, buddy. I always tell realtors, stay in your lane. We do the housing part. Somebody asks, one of your clients wants to know about credit, call Blair, get with Blair first, go there. If you're a realtor that doesn't know Blair, call Blair anyway. But if you have your own lender, then start there and stay in your lane. Do not pretend you know what credit scores work, because what Nathan just said was, the numbers that you see aren't necessarily the numbers that are going to work and something that Blair can use to get you a loan. So stay in your lane, stay in your lane, stay in your lane. That's what I always say. And it's the right advice for a realtor.
I totally agree with you. And I have to stay in my lane to understand how this can be changed. Do I see if something can be worked on? But so often I get Credit Karma scores. And guess what? Credit Karma wants to sell revolving credit card debt, not mortgages.
They all want to sell something.
Yeah, if you're getting a credit report and you're getting a number on it, they're trying to sell you something, whether it's an auto loan, a credit card, whatever. Please don't trust those scores. Please either, as they said, contact me or go to and pull a free FICO 2004 standard, and you will get your accurate score. Now, there is a way to pull your free credit report year round, okay? People say you get a free credit report from each of the 3 bureaus, but you don't have to pull them all at once. This is what I do. Since I went through and I had a less than a 400 credit score a long time ago, I manage my credit by looking at a free credit report once every 4 months. So I get Experian early in the year, then TransUnion in the middle, and then at the end, I get Equifax. You can do this for free, but you will not get a score. All you're going to get are all the trade lines. You're going to get all the data historically from public records, from credit pulls. You're going to see all those actions, whether they're there or not. So again, this is one way to approach that so that you can help manage your own debt and your credit scores. Would you agree with that, Nathan? Would you add anything to that?
Yeah, that is a good strategy. There are websites that will provide you some of this information, not all of it, but there are ways to access it for a cost, sometimes for no cost. But ultimately, basing your decision on anything that's not the actual report that's being pulled may disappoint you because your scores may not be exactly what you think they're going to be.
I would go to the point of saying it will disappoint you.
Yeah.
Just because, Credit Karma is not free. It's not true because it's 6-month-old data. It's not up to date. When I found out and really understood that, I was 100 points on Credit Karma, 100 points behind my real score because it was 6-month-old data. And so as you're working on this, building it up, talk to Nathan. In fact, Nathan, this is a great stopping point. How do they get a hold of you? We see your number there, but
yeah,
how do they get a hold of White & Jacobs? Tell us about them a little bit and what's the best way to talk to you.
Yeah, so obviously my phone number is here. That's my cell phone that people could call or text. The name of my company is White Jacobs and Associates. We're located in Plano. We have attorneys as well as a research department that can help with a lot of different questions. I personally am able to help anyone if they want to view a credit report or go through one or have questions that are general about credit. The whole point of this is to help them get to the point where they can get an approval on what they're trying to get approved for as quickly as possible. So most of the people that come to me are trying to buy a house, but there's a lot that are in other positions. Maybe they're trying to get a new job that requires a good credit score. Maybe they're trying to get approved for a good loan, auto loan rate. Maybe they're trying to get into commercial investing. There's a lot of things that we can help because credit scores are that prevalent. So I'm happy to talk with anything about, any type of credit issues. There's no cost involved unless they choose to actually have us represent them in audits where we're working to get negative information removed from the credit.
And it's great, timely information. I've been doing this a long time, and I called Nathan yesterday. I had a client that had a question. I didn't know the answer. I called Nathan and I got the answer. That's how it works. And that's how the process starts. It
is. And I will tell you, I've been working with Nathan now over 6 years. I've seen him move 100 points for people in 60, 90 days. But he does what he says he's going to do. So many people, they don't follow through. Here's the interesting part. You do not want to work with a credit group that does not have a lawyer. There's so many of them out there. There's nothing certifying credit repair. No industry or massive certifications are out there. It's just people. And the bottom line is you need people that have teeth. They have gone to court one time. Is that correct?
Well, we used to go to court more often, but in the last few years, maybe 1 or 2 times. That's all that's necessary.
And if they have to go to court, they represent you for that reason, and they've never lost.
That's true.
Guys, I'm just going to tell you, they do that's why I work with them. That's why I've been approached so many times. He takes care of my customers well, and he meets deadlines when necessary. He'll tell you what it's going to take, and I believe him. He can't shorten the process, but if he says do it, it's going to happen. And so just be aware. Call him up. Ask him questions. It's an opportunity for you to make your world a little bit better. And he has been such a blessing to my clients as well as Alan's. So what else are we not sharing, Nathan?
I got one little thing I want to bring up that I think is really pertinent, especially today. And please, everybody, there are so many scams going on with texting. If it's anything to do with credit that you haven't solicited, that you have companies do not text you. They don't send you a link to follow, So don't fall for any of that. If you're at least suspicious and you don't want to erase it, then call somebody. Find out what they think about it or something. But don't hit the link. They're out there every day. You know, if you're listening to this, you've gotten one of those scams on your text, and they're dangerous.
I
Yeah,
agree.
and I would add to that if somebody texts me, that's perfectly fine. I'm going to ask them when we can get on the phone, because there's a lot of information that we can discuss verbally that it's not going to be possible to just do in text and email. And ultimately, the main thing that I like to do is save people a lot of time and money that they would waste if they're doing things that they're unsure about. You know, how many times do I talk to people where they've spent a bunch of money to pay off a car loan or something else, and it really didn't improve their credit scores at all? Or talk to people that applied and got a new account that's really not the kind of account they need to help improve their credit. So
That's
it saves them a lot of time and money just to speak with me, even though they're hesitant to discuss credit because it's a sore subject for a lot of people. It's a very simple, straightforward conversation, and there's very real solutions that you can start right away to help building credit scores.
And cars. I mean, don't buy a car until you talk to Nathan. Talk to somebody before you buy a car.
Yeah.
I don't care who it is that says, just go buy one. You can afford the payments. No. If at all want to do a house at some point in the future, talk to somebody before you just go out and buy it. I watched literally almost a divorce happen in front of me when at the closing table, everybody found out that Mr. Husband bought a truck the day before.
Oh.
And lenders will check your credit 10 minutes before you close. And the woman said, go live in your new truck, honey. And it was so sad. And so that cars, we all have to have them, especially in Texas, a lot of highways, we got to get places. But before you do that, even if you have the money to do it, if your goal is to have credit to buy a home, you need to talk to Nathan first.
Yeah.
Just make the call, get the relationship established, and do it correctly.
Yes.
Totally agree. Anything else, Nathan, that we've left off?
I will say the same kind words that you said about me, about you, although I'm sure that is what you talk about on here every time I'm not on. So Blair is somebody that if I need
we
to
talk about you all the time, Nathan.
Right. If I need something done, I get Blair involved because I'm not a loan officer and I don't pretend to know everything that a loan officer does or knows. So he is the ultimate professional, and I come to him with a lot of questions. And so it's the kind of thing where, you know, there's different experts involved, and make sure you're engaging all those people to get the best information.
Absolutely. Well, thank you for that. And thank you for your time today. We are so blessed. I think this topic is so important. I think people underrate it to understand it. They take it for granted for most of the time. And then when it gets to the point of being a concern, it becomes that standoffishness or I don't want to talk about it. I'm hurt by it. So I hope we've opened the door to some thought processes. We're not here to judge. In fact, I think I'm the worst because I went through a bankruptcy and my scores were right around 400 at one point. So understand, I'm sitting at 813, max is 850, and I don't think anybody cares unless your credit's 780 or better. That's the top of the line for the most part. So open up the doors, take some calls, ask some questions, give us a shout. I just thank y'all for the time. Nathan, thank you again. I hope your kids are doing well.
Oh, yeah.
And I know Mark, appreciate your support on the poker event. We had a great time. But I'm Blair Thomas.
I'm Alan Pace.
God bless. We'll see you next in 2 weeks.